Good morning, everyone. Today is June 1st, 2021. This is StockCast, your pre-market show. I am your host, James Mason, and with me, well, not with me today, is Todd Derby. He will not be here. So if you came here for Todd Derby, you wasted your time today. So let's go ahead and get into it. The Dow futures are currently up 252 points. S&P is up currently 22.5 points. And we're going to come out today pretty strong and bullish, but I expect it to chop around and potentially pull back intraday. So let's go ahead and throw up some charts here. Let's see what we got going on. Good morning to everyone in the comments. All right, let's see what we got going on in the comments. Everybody, drop your tickers and the reason why. Throw some ranges out. Let's see what we got going on in the markets. Let's get some ideas going. All right. So I didn't feel like typing this one out for the mail call segment today because it's kind of long. Sean McKinney. All right. So, anyways, the question was, why do shorts have to cover if AMC starts to go up in price? Why can shorts just wait till it loses steam, wait for people to take profits, and then it comes back down? What causes them to cover and thus the prices, rise drastically? All right, so I'm just gonna put this in a very simplistic way. Let's say a stock has 100 shares on the market, and we'll say 50 shares is the float. So anything over 50 shares starts to make that price really, really go up. Well, you have this hedge fund or whoever it may be shorting, and let's say they're shorting with 10 shares. Well, as everybody is buying this stock for whatever reason, and this stock keeps pushing up, these shorts, they can hold on to this short positions indefinitely. Everybody always tries to talk about how, the shorts are getting eaten up with fees and all this hearsay, whatever. A lot of these people don't have a clue what they are talking about at all. They always talk about these astronomical percentages and how it costs more for these people who are shorting to short than what they can actually make. That's not true at all. It's roughly pennies per share to short. Nothing. There's nothing else to it. I mean, it's not like they're paying dollars. A lot of these people try to make it out to sound like these people are paying $10 to short a $5 stock. That's not happening at all. So I just wanted to kind of get that out of the way. A lot of people tend to think that dumb crap, and it's so silly. So back to our scenario. We have 100 shares in this company. 50 shares are short, and it's going up. Well, this hedge fund is, say, shorting with 10 shares, and, no big deal to them. They don't have to worry about covering their shares because they only have 10 right now. So they can hold off. And if that price goes up and then eventually falls and puts them back in a profitable range, they can keep shorting, doing whatever, and cover whenever they want. But let's say if now in this company, 90 shares have been bought up out of that 100 share total, this thing is really squeezing at this point. And then this hedge fund still is shorting with 10 shares. Now you got to remember, he actually doesn't even own any shares. It's essentially like having a contract saying that you bought in to short at this price, and your P&L will be the difference between whenever you bought in to whenever you cover. So if they bought in, say, at $10 to short and it drops to $8, they'll make $2 per share profit. But if they bought in and their average is at $10 to short and it goes up to 12. Well, they lost $2 per share. But these guys can actually hold this indefinitely unless their clearing firms call back their shares. And the clearing firm or the brokerage firm, they can call back shares for whatever reason. I mean, it just really comes down to them, because at the end of the day, that risk does fall into their lap. But to answer the second part of this question, when they go to cover, why does it basically help increase its velocity? So now in this scenario, we have 90 shares that have been purchased out of 100 shares. And the price is just, it's just going up, and this hedge fund decides, hey, okay, I need to cover here. I'm losing my shirt. And so what's going to happen is, in their portfolio, that position size actually says negative however many shares they have. So for this scenario, negative 10 shares. Well, when they go to cover this, they actually have to buy back 10 shares in the market, for whatever price it may be, just to zero out that position. So as this price is moving up and these guys are covering, a lot of times when they go to cover, they're slapping market orders, or if they're getting squeezed out and their accounts are blowing up, these accounts, this entire position size, will cover as a market order. So it's buying back in at the market, and whatever that market price is, or whatever that level 2 is, if they have a significant enough position size here, it can eat up the entire level 2 and just cause that thing to really start gapping up here. So that is like a quick, simplified explanation. I hope that helps you out. And if not, just let me know in the comments. It'll help with engagement. So let's take a quick look at the comments again, see what we got going on. So good morning to everyone who has just tuned in. All right, let's quickly talk about AMC today. Now, so far pre-market. Hold on, I was just looking at some news real quick. All right, so far pre-market, the volume it's pretty light, to be honest. But AMC is kind of like the top mover right now, at least on my scanner. There's a few others, but nothing significant really speak about. But here we are, AMC. We can see on Friday it ran up and it pulled back, pretty good, which is to be expected. What happens a lot of times in these like short squeezes like this, and I'll show you another short squeeze here in a second. It's ticker VTNR. But right here on AMC, what happens a lot of times in these short squeezes, they'll push up and you'll start to see them literally stand straight up on the chart with their candlesticks. And then at some point, people are going to take profits, things like that. Or you're going to have people taking significant sizes shorting. Now, this right here is profit taken for the most part. Obviously, we know people jumped into short, but, very insignificant at this point. So these are people taking profits. Can't blame them. I mean, they rocked out, made a ton of money. Congratulations. What happens all the times if this momentum sticks up here or holds up here, for instance, on this daily chart, it'll push up and then it just kind of needs to cool off for a moment. So I kind of expect it to chop right here for maybe a few days. Heck, maybe just today and tomorrow. I don't know. And then eventually break out for one more run to break these highs above 36.72. So I do expect one more run out of AMC, and wherever it goes to, really, who knows. What I would watch out for overall is if AMC was starting to drop below $20.40. Now, we are talking a 10-point difference, but when you're in a trade like this that has so much volatility, you do have to open up that range of realism and understand that, hey, there's so much volatility here. This thing is going to make major moves to the up and downside. So 2040, if I was in this trade right now, would be kind of where I get weary and worry about, what it's going to do if it gets below that. But other than that, I do feel like AMC is going to have one more strong push in this whole run before it really pulls back. Now, let me show you that true squeeze that's taking place in ticker VTNR on the daily chart. All right, so this is ticker VTNR. You can see back here when it was consolidating right before May 26, and then we gapped up. So this is a true short squeeze right here. This thing gapped up. Caught a lot of shorts off guard at this point. And that's why it had gapped up so much. And then Friday, boom, gapped up again. And then here we are pre-market. So Friday we closed out at 781. Then here we are pre-market at 980, which is, let me scroll way out. You can see that dash line, or you might not be able to see it, but we're right here. We're testing these all-time highs. What's going to happen in ticker VTNR, in my opinion today, which I have to say in my opinion legally, but what's going to happen is this thing is going to print a solid red day and sell off. It's going to be a fader. So just watch out for that in VTNR. But looking back at the daily chart, this is a true short squeeze on the daily chart. You can see just there's nasty gap ups for those bears going. I mean, they're just getting demolished here. All right, let's take a look at the comments. Let's see, ticker CTIC. CTIC had a nice pre-market push up. Looks like it's running out of steam. Did they drop news? Couldn't find anything. So let's take a look at ticker CTIC. So last update on CTIC. Shares short, 334,000 shares being short. Pretty much nothing else of significance there. Shares outstanding, 93.3 million shares of the float, 69.5. News. So they did drop news today, and basically the news is just stating that it's an acceptance of NDA granted with priority review of something. I can't see the rest of the headline. Really, with those NDA reviews, that's honestly not significant. So if we look at CTIC on the 5-minute chart, you can see why this thing had this little pre-market push up, and that was just the initial release of that news, or them knowing the news was going to come, and really market makers probably wanting to cause people to have FOMO here on relatively something that had like no volume pre-market. So this thing made a little push up, and of course it's pulling back. It's probably going to stay in this range and not really do much today, in my opinion. And looking at it on the daily chart here, let me just kind of zoom out a second. All right. So what we need to see for CTIC to stand any chance of making another push, which is going to be kind of hard unless if they release a real catalyst. But if they're just getting a review from the FDA on whatever it is that they're doing, I highly doubt that they're going to release any catalysts anytime soon. But looking at this daily chart, we need to see this non-EMA line physically cross above that 200 EMA line. And see that 200 EMA obviously won't update until the market opens, but Current value for that 200 EMA on the daily chart is $2.57. The value for that non-EMA is $2.35. So before I would actually consider, me personally, like jumping in this, I'd have to see that non-EMA cross above it. And we'd probably just really enjoy a little push if we even got that. I would have a hard time seeing this thing break back above 330 for a while. It might come up here, test that range in the days, weeks to come. It's kind of hard to tell. And then really sell off. But I really don't see that bullish push happening today at all, to be honest with everyone. And that is CTIC. All right, so I'm just going to run through the comments real quick. Take a look at ticker BBIG. All right, have a comment here. BBIG is supposed to drop catalyst next month. What are my thoughts? Let me take a look. All right, last update for short interest on BBIG. Shares short, we'll just round it up, 1.8 million shares being short, 9% of the float. Shares outstanding, 28 million shares outstanding. The float, 19.6. They filed a form effect today, so that will be worth looking into. Friday, we closed out at $2.83, and we're currently up $2.87. And this thing might have a little bullish push today, but I don't think it's going to do too much. We might break above that $3 range. But again, on a shorter time frame, I would like to see this thing, this non-EMA, break above that 200 EMA for that crossover before taking a position here. If I was going to jump into this, I do like the share structure. I do like that lower outstanding share structure. That's pretty nice. But let's see. All right, so we probably, looking at this daily chart here, we can see that obvious gap up right here, and then really this is just people hopefully trying to push us up and then selling off and kind of here again. But we've had enough time now to where this thing will probably have one more decent little push, probably push up into this mid to higher $5 range. And then start getting rejected in there and then sell off. So what I'd like to see, if this thing, let's see, hold on a second. So if I was going to trade this, to be something that I would just take a small position in and not get too crazy over. Because when I look at this chart, the true breakout that I see is around that $4.20 to $4.25 range. If you look where I drew my line, where that momentum will shift, breaking above those daily candles, that's where I'd make my entry. And again, if I was going to trade this, it would just be a smaller position, and my target price would be around that mid $5 range to upper $5 range. Overall, I don't see making a lot of profit in this, but you can make it a decent little swing trade. Probably, I don't know, a good chance of taking a point in profit. Really just depends on the momentum here and any kind of news they release in the future. But that's what I would see for a true breakout range. As of right now, it's still hard to say. I mean, if you look at these daily candlesticks, we are still below that non-EMA. And if you're below that non-EMA, ooh, that momentum for the bearish side, the short side, really starts to pick up. So that's what would kind of concern me here. I mean, at the soonest, if I was going to jump into this, which I wouldn't, but the soonest would be like 315, just breaking above that little arch in that 9 EMA. And again, you'd have to watch out for something like that with it really pulling back on you. So this is why I really was just talking about like taking a small position here. If I was going to jump into this, it would be kind of risky. And I literally just try to limit my exposure as much as possible. So that is ticker BBIG. Oh, well, look who showed up in the comments, Mr. Todd Derby. It's like skipping school and then driving by at lunchtime with your little McDonald's kids meal to scream at the kids at recess. All right. So, oh, okay. You're sitting in the dental chair. Okay. We all know that you're getting your colon cleaned. You're not at the dentist's office. All right. Let's see what else we got going on in the comments. Let's see what we got here. How about CX? A lot of talk moving on about the internet about this after the price target being raised to $10 last week and cement used in Biden's infrastructure. Well, let's have a look. The thing is, when people start talking about these economic packages and infrastructure plans, and then they start trying to talk about, for instance, here with like a cement company, man, you know how many cement companies there are in the country? There's a crap ton. So just because like one is trading on the market, that really doesn't mean anything. It's not like the Biden administration is gonna be like, okay, we're gonna drop this infrastructure plan. What stocks do we have trading on the market for cement? So, all right, last update, short interest, 4.7 million shares being short. Shares outstanding, almost 1.5 billion shares outstanding. The float is literally almost the same, about 20 million shares difference. When you're talking billions, 20 million ain't crap. So to be more exact, like 1.472 billion shares outstanding. With that many shares on the market, it's a lot of shares that have to be bought up for this thing, for any ticker to really make a push up here. Me personally, I don't like this little setup. I mean, if you look at it on this daily chart, you can see it's just been uptrending for a while. And if you zoom out right here, I mean, we are in this range of just like very fierce resistance. Let me just kind of chart this a second. All right, so looking at this 9 EMA, and I just drew out those support and resistance lines, we can see we just broke above that resistance, which is now acting like a support, and it's trying its best to hang on. This is that tricky little stage to where it's like a coin toss. It's too hard to know if it's going to actually go up here and test this next resistance, and it's really not showing a lot of strength sitting on that support. If I had to bet, I would say that this thing is actually going to pull back. by looking at this MACD right here. We are still pretty strong red on the MACD, and I mean, it's really at this moment not really a good buy based off of the indicators. So I would kind of expect this thing to break back below this $8.18 range, and then pull back here to about $7.30 and test that range at least once more. And we might get a bounce at that point and come back up and break through this level to make another run up to about 9. But again, ton of shares on the market. There's a lot better stuff to trade. Just because an administration has some infrastructure plan and there's a company on the market that could benefit, when you're talking in the realm of concrete is literally a dime a dozen. It really kind of just falls into that saying. Concrete is freaking cheap. And there's a bazillion companies out there in the business of concrete. So that is just not significant enough for me to even care about. And me personally, I wouldn't even chase it. And there are better tickers like Predictive Oncology. And right here, baby. Right there. See? Didn't even have to say anything, but this spells out POAI. All right, everyone. So that is all I have today. And be sure if you want to try to get your question on the mail call segment, call that number below at the bottom. The number is 615-981-4715, and ask a legitimate question, but not too long. Not too long. Because it takes a lot of reading, and if I type it out, that's a lot of typing. All right, guys. So I appreciate y'all tuning in today. And we'll see if Todd Derby decides to come back to work tomorrow. All right. Y'all take care and trade safe, and we'll catch you in the next one.